Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 16th, 2016. Again, stock indices and many of the stock funds are hitting all-time highs. The market is somewhat overextended, by no means weak, so we'll look at a bunch of funds that hit all-time highs. We'll look at utilities and real estate, which are bouncing higher, and possibly due to the expectation that there will be a bounce in bonds. We'll look at the currencies. The dollar is hitting multi-year highs, and euro is hitting multi-year lows. Of course, this currency situation is weighing really strongly on gold and gold miners, and they are maybe headed for a retest of multi-year lows. Oil is at 52-week highs. We'll see where that's going. Natural gas is pausing its rally, and finally we'll finish off with copper. Alright, let's start off with our chart. We always start off with S&P 500 on a daily time frame, total index. So Tuesday we hit all-time highs, all-time closing highs. Very strong move of the election lows. There was apparently a lot of pent-up demand for stocks, and this is clearly a very bullish move. My subscribers and myself were long stocks from before the elections, so hopefully they're probably already taking profits. I have taken some profits, and riding this wave up, which could still continue. I don't know if we're going to get a significant pullback or we're going to just continue higher. The underlying indicators are confirming all-time highs. The on-balance volume, the advanced decline line, and advanced decline volume lines all are hitting all-time highs. We are somewhat overextended to the upside, but you can see that we were even more overextended back here after the Brexit low. So, like I said, we could still continue higher. Here's a little bit longer term time frame for S&P 500. On this chart, I wanted just to show this indicator RSI, and you can see we're certainly overbought here. But again, overbought does not mean weak. In fact, it means that there was a lot of buying pressure and a lot of buying interest in owning stocks that pushed the index into overbought territory. So I don't even remotely contemplate a bear market at this point of the game. There's a couple of proprietary indicators. Market breadth index is a full-blown bullish move, bullish posture here. We were a little bit oversold in one of my other indicators, raw MBI, and then looks like we're getting back into the somewhat overbought territory. But again, overbought does not mean weak. In fact, it means quite a bit of strength. S&P 500 on the weekly time frame, you can see that this is appearing to be kind of like a maybe possibly a shooting star candlestick on the weekly time frame, and this is normal. This is about almost a 10% move here, so a pause of some sort is absolutely normal. We could see consolidation, maybe kind of like this here, and then maybe a little bit pullback and then continuation higher, or we could see something entirely different. We could just continue higher. This also could happen. The Dow Jones Industrial Average is getting very close to the coveted 20,000 level. It was at 19,966.43 here on Wednesday, and it's possible we could get to 20,000. Maybe that's when the shorts will come in. Here, the same thing. We have confirmation from unbalanced volume, from advanced decline line, and from the advanced decline volume line. So far I don't see any red flags. So we'll see where that goes. Here the QQQ, the Nasdaq 100 ETF, also hit all-time high here on Tuesday, right? Here I actually had a question from one of my subscribers, and he was wondering whether or not he should be going long. I think it was somewhere around here, and yes, you should be going long, absolutely, because looks like we're now at all-time highs. I said that this weakness here, we didn't really participate that much in the election rally, but I said this was a temporary weakness, and we will eventually resume the rally. So we're now at all-time highs, and this is a confirmation from the this index as well, from QQQ. Also, advanced decline line is hitting all-time highs, so that's good news, and the same goes for advanced decline volume line. So far I see no major divergences in the QQQ. XLK, this is a weekly time frame for XLK, all-time highs. This is good news because this is leadership from the technology sector is a good sign for the general market as well. Within technology, semiconductors have been extremely strong. I mean, they started their rally, well, back in February, I guess, and they just never looked back. These are all-time highs as well. Financials, of course, on the heels of interest rates going up, all the multi-year highs here as well for financials. So there is a little bit of selling here on this week. This is a weekly time frame. So, this is a very strong move, so it's normal to give back some, and there's this gap here, so maybe they'll close this gap. Consumer discretionary, also one of the most sensitive economically sensitive sectors. Same thing. This is a election low here, and then all-time highs. Here's energy. I was quite bearish on energy up until actually quite recently, but now looks like we broke out of this resistance here. There was resistance here from this broken support, from this top, several tops here, and then now it broke out, and these are 52-week highs. So correlation between the stock funds is quite high, so we could put a correlation coefficient on this. And generally speaking, you can see it spends most of its time in the positive territory, so stocks correlate greatly to other stocks. And looks like we're heading higher for energy as well. Basic materials also all-time highs, so this is more volatile sector than the other sectors, but nevertheless this is a very much a high beta stocks are in this sector, so this is good news for the general market that they're leading the charge higher, so to speak. These are utilities on the weekly time frame. So first of all, utilities I associate with stocks more than with bonds. Mostly they correlate relatively strongly with stocks. Occasionally they negatively correlate with stocks, but generally speaking, I think utilities are mostly correlate strongly with stocks. So having said that, bonds have been under pressure and utilities also have been under pressure. So I think bonds are, when we get to them, I think they're bottoming out more or less, and we probably will see at least a bounce. And I think utilities are already anticipating that bounce, and they're already off their lows here. Same thing goes for real estate. Real estate also is associated mostly with stocks. These are all-time highs, but then we corrected quite a bit, and now we're basically moving up, somewhat moving up together. And bonds, most likely when we get to bonds, we'll talk about how they're probably gonna stop falling relatively soon. So to summarize, stocks are bullish, even though they're at all-time highs. It does not mean that they're weak, so most likely any pullback should be viewed as a buying opportunity. Alright, today let's start a little bit differently with bonds. We'll look at the high yield universe first. So first of all, these are all-time highs. And by the way, this is junk bonds total return. In other words, the dividend yield or the coupon yield is included in this price. If we take out the dividend yield, the chart will look completely different. But with the dividend, it's in at an all-time high. So generally speaking, strength in junk bonds is a good sign for the stock market, because you can see junk bonds correlate strongly to the stock market. Here's junk bonds in the weekly time frame. This is showing all-time highs here. So we exceeded the previous high, and I kept saying the same thing. You can listen to my previous videos that this weakness was a buying opportunity, and I actually have a position myself open in junk bonds that I opened back here around November lows. So junk bonds are, as you know, it's high yield. In other words, these are lower quality investments, but nevertheless they correlate strongly to the stock market. So it's a good idea to have some, because they have less volatility than stocks. But as we move up the ladder in the quality, for example, here is the high yield municipals, and high yield municipals really unraveled, and this is a 52-week low. So I pointed out this big volume pattern here, and I think maybe we're bottoming out here, at least in the short term. I think in the longer term we have had a reversal, and we are going to be making lower lows and higher and lower lows and lower highs in the near future. But I think a rebound is definitely in order, and most likely it will take this fund to the breakdown level of around 31. Here's another municipal fund in the weekly time frame, MUB. Looks like we're bottom, also bottom in action. Look at this enormous volume spike. So it seems that there is quite a bit of interest in buying in this at these levels here. So as we move up to investment grade bonds, you can see that there's a lot of weakness in this fund. Still making lower lows, lower highs. We're just really having a hard time hanging on here. And of course, as you know, last Friday we had an announcement, or just recently we had an announcement about interest rates going up, so that is certainly not helping the bonds at all. Here's the same fund, AGG, on the weekly time frame, and it looks like we broke below the support level, and this is a breakout level, and I thought that we were going to hold here, but so far we haven't held, so maybe this is going to continue to unravel. Alternative scenario, of course, is we do hold here. Maybe this is a market maker maneuver again, when they push the prices below the obvious support level, and then the prices turn around and rebound. So we'll see where this goes, but so far it's not looking great, honestly. Here's TLT. I kept thinking that this is it, maybe we're seeing a bottom in action, but we keep making lower lows and lower highs. So even on Friday, just on Friday and Wednesday of this week, we made lower lows here. So again, not a very encouraging sign. Maybe we haven't broken significantly below the December 12th low, so maybe we are holding in this 117 area. However, TLT did hit fresh 52-week lows. So these prices here at 117.14 are even lower than previous November prices. So this is not encouraging at all. And look at this move. This was all-time highs, and then we just turned around, had a support break, and now we're at 52-week lows. So certainly not encouraging, but certainly somewhat oversold. And again, I think that a bounce higher is possible, but I think that this bounce should be shorted. And moving on to the Forex universe, here's the US dollar daily time frame. Multi-year highs, so this is pretty much speaks for itself. very strong move, had a breakout here, breakout, throwback, strong rejection candle here, and then continuation higher, and then now we're at multi-year highs. These are multi-year 52-week, actually these are multi-year lows for the euro and for the British pound, of course, as well. Here's the US dollar on the weekly time frame, and this, I pointed out this breakout, well, this is the 5th week already, and it looks like so far we've been continuously closing above the breakout level all 5 weeks, so I think we can confirm this breakout now. As far as the target, well, the depth of this pattern is 9%, so we could easily see a move 9% from this breakout level. So this will put us somewhere around, I guess, 109 or so for this level. But this is a conservative target, and we could see a stronger move up. For example, you can see a breakout here. Sorry. We could see a move of this magnitude, which is 18%. So either way, this is a good looking move, and you know, if we are traveling, for example, to Europe, the dollar will go a longer way, and you can, you know, see more sites in Europe, for example. So if you have American dollars, now is a good time to go. So these are multi-year lows. I pointed out this rejection spike here. Basically, very simple pattern. You know, we had a breakdown, throwback, rejection, really strong move down, another throwback, and we got rejected exactly at 50-day moving average, and also at this broken support. So far it's been just making a lower lows and lower highs, kind of like a textbook pattern, zigzagging high, lower. Here's that same chart in the weekly time frame. If you look some of my previous videos, I've been pretty consistent. This is a bearish chart. Basically, very strong move down, a couple of rebounds, and a continuation. British pound, you know, we basically got back to the broken support here at 12.863, but maybe this is it. I don't know. Maybe we're just gonna resume our downward spiral for the British pound. And on the weekly time frame, it's pretty clear. It's a bearish chart. These are 30 plus year lows. US dollar versus Japanese yen, very strong move. So the yen almost collapsed versus the dollar here. But then again, it's a little bit maybe overextended, so we may see some consolidation, possibly. Although if you listen to my videos, I think I said the same thing around here, and this clearly did not happen. So this is a weekly time frame. I kept pointing out this rejections here at the 99-100 level, and then we basically rejected again, and then just never looked back. So very strong move, almost vertical move. I think it's definitely getting to be overextended, and I think now also because we're getting to these levels here, which are much stronger support level, resistance levels than before. So we should see some selling, maybe here at 118 or maybe even here at 121. So I think the move is kind of getting ahead of itself, but generally speaking, I think the US dollar is now bullish versus the Japanese yen, and as we will see in a few seconds, the strength in the dollar is certainly weighing on precious metals. So gold, I showed this chart in the past. This is gold in yellow here and dollar in green. And there's a correlation coefficient here. And by the way, this is a weekly chart going back to 1977, very long-term chart. You can see the correlation coefficient spends most of its time in a negative territory. This makes perfect sense because gold is priced in dollars. Lately, as you may have heard, I just said that the dollar has been strong, and actually broke out to 13-plus-year highs, 14-year highs. So gold is under pressure as a result. In fact, here's gold on a weekly time frame. These are 52-week highs, but now we're just breaking support after support, and we're still having a lot of trouble finding support, and these are also multi-year lows. So it's entirely possible we're going to continue to unravel and basically retest multi-year lows. This was a very important support at 1200, and we broke it. So now there will be resistance at this level. Here's a longer-term view of this gold market. This is going back to 2012. So basically we had this is one of my proprietary indexes, gold breadth index. So we started the bear market here in 2012. Had multiple attempts at breakout, but we failed all of them. Only the latest one was confirmed by market breadth index, but now I am seeing that looks like it's still possible that gold will rally from here, but it is getting less and less likely. So we'll see where this goes basically, but if we get any more deterioration in the market breadth index for gold and then market breadth measures, for example, here's gold miners ETF GDX, and for it we have advanced decline volume line, and bullish percent indexes. So all of those are rather ominous looking, except for maybe advanced decline percent, which has not yet hit this low. You can see that it is slightly above the previous low, but the advanced decline percent, rather this advanced volume percent, but advanced decline percent already did hit the low here. On balance volume is also moving lower, and you can see that bullish percent index actually, that was my major concern back in October. I pointed this one out. So the longer we spend here, the more it is likely that we have now entered a bear market. There is yet a slim chance that we may turn around and rally from here, especially if the dollar stops appreciating so much. But it is getting increasingly unlikely that we are going to stop here and turn around. So gold may have entered the re-entered the bear market yet again. Basically, we'll see within the next few weeks if I'm if we will rally from here, or if we just continue sideways or possibly down. Okay, here's oil on a daily time frame. This is West Texas Intermediate. So we had 52-week highs here. Actually, this is Tuesday. So I was thinking about shorting oil, but I just felt like there was not enough selling pressure. Like, for example, here there was quite a bit of selling pressure, so I was more comfortable shorting here. But here I was just like, this is just not strong enough of a move. So it was a good thing I stayed out of this market. Basically, I don't have any longs or shorts right now, but these are 52-week highs, so I have to respect it. So on the weekly time frame, we could see a move higher. Obvious target would be around $62 here. Above that, I have no idea. What I definitely know is that United States producers can ramp up production, and they are already doing so. So that would lead to higher supply and lower prices. Maybe the prices will stabilize. Maybe they'll kind of move in oscillating manner, but I just don't see it going very much higher. But you never know. So oil, I'm basically staying out of the market for now. Okay, here's daily time frame for natural gas. basically broke out here in June and had a couple of throwbacks. Here's a throwback. Pretty wild action here. There's a big gap, but then gave it all back. But now we're at 52-week highs. So in general, commodities are very volatile, so you have to be extra careful trading them. I think in the long term, natural gas is bullish. Looks like we filled the gap here a couple of weeks ago from 2014, and we achieved 52-week highs. So it's possible we're going to continue higher to like 475 and attempt to go higher. But this is already a relatively strong move, so I guess a pause of some sort is also possible. So because this is a let me see. This is a 133% move, so it's a pretty strong move, and maybe we'll kind of move sideways for a little while. Here's copper in a daily time frame. So for the record, I think it's bullish, but it was way overbought here. I cautioned in my previous videos and my subscribers to avoid buying up here. Looks like we are correcting. Now almost always breakouts get tested, so it's possible we're gonna get a correction way down back to here, to like 230, 235. Whether or not we will hold it there and maybe we'll just completely unravel and continue lower, it's also a possibility. For now, I guess I'm going to be treating this breakout as valid, and we'll see where this pullback will take us. But like I said, breakout happened here at around 230, maybe a little bit higher actually. I can adjust it. Maybe above this high here. So far, again, I think this is a valid breakout. And basically what I'm looking for is a pullback of large enough magnitude to be, to look for a relatively lower risk entry, basically. Anyways, if you like what you're hearing, please consider signing up at MasterChartsTrading.com and stay tuned for how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.